Are you curious about what's happening in real estate right now? I'm Michelle Clemens, a local realtor in Joplin, Missouri with Burt Realtors. In this September 2025 market update, I'll break down what's happening nationally, locally, and how it impacts you as a buyer or a seller. If you want to learn more about what's going on in Joplin or real estate in general, make sure to subscribe and hit the bell so you never miss a new video. Now, let's take a look at what's happening in the market, both nationally, and then we'll break down what's going on locally. Let's start with mortgage rates because I know that's on everyone's mind. You can see here that rates have dipped slightly after a weaker jobs report in July, but overall, they're still hovering around the mid 6% range. This is encouraging when compared to where we were, and it gives both buyers and sellers a bit more confidence moving forward. I want to let you know that the data that we're going to be looking at is from July because that's when they have local and national data all compiled for us to use. Harold Fairweather, chief economist at Redfin, had this to say. Today's mortgage rates already have the anticipated September Fed rate cut priced in. This means that when the Fed officially announces the cut, we shouldn't expect a significant corresponding drop in mortgage rates. The Fed meets this week and a rate cut is projected, but they only set the short-term federal funds rate. They don't set mortgage rates. Mortgage interest rates are more closely tied to the yield on 10-year Treasury notes. The federal funds rate influences mortgage interest rates, but other factors such as inflation and unemployment also play a role. It's more about stabilization at this point rather than any big surprises. Let's take a look at listing prices. Nationally, listing prices have flattened, and that's a good sign of stability after several years of rapid appreciation. For sellers, this means pricing your home correctly is more important than ever because buyers are more price sensitive. For buyers, it offers a little more predictability and less fear of being priced out overnight. If you take a look at the prices in this chart, you can see that they're about $200,000 more nationally than what our market is locally, which makes our market very desirable for out-of-area buyers. Home price growth has slowed compared to last year. Now let's take a look at this. It doesn't mean that prices are dropping, but they're just going up at a slower pace. And this creates a healthier long-term market, a more balanced market between buyers and sellers. If you take a look at this graph, you can see that the only times that we had depreciation, and it was very slight and for a very short amount of time, was back in April, May, and June of 2023. And then prices shot right back up, took a little bit of a dip and kind of leveled off, and now they're going back down again. Don't expect this to last, and I'm going to tell you why here coming up. So one thing to always keep in mind, every downturn in housing is followed by a recovery. As you can see in this chart, we saw this in the 1980s, after the 2008 market crash, and even during the 2020 pandemic when things slowed down places in the country temporarily. The market always rebounds, and today's numbers suggest that we're on that same trajectory. Now, you can see here that it shows that there was, a drop in home sales by 27% during COVID. We didn't have that here. We're going to talk about that coming up. Looking ahead into 2026, you can see that forecasters are expecting a stronger recovery momentum. That means more home sales and renewed buyer confidence. So if you're thinking about making a move in the next year or two, it's worth starting that conversation now so you can be ready when that shift happens. If you're thinking about buying a home in the next year, but you're waiting for interest rates to come down, I want to give you something to think about. When interest rates come down, what do you think is going to happen? Because interest rates have been high, there's a lot of what's called pent-up demand. So when the rates come down, the market's going to be flooded with buyers that have just been waiting. When that happens, it's going to put more pressure on the home prices, causing those prices to go up. This is exactly what happened in Joplin, in our area, the whole area during COVID. People were moving here from all over the country, and the high demand, along with the super low interest rates, drove those prices straight up. Now, while it's not like that right now, every day more people explore buying a home. One reason I hear a lot, it has to do with rent being so high. I have several buyers right now that are buying because their rent just keeps going up and they want more predictability in their housing budget. Now let's take a look at what is happening locally. The median home price in July in our area was $215,000, up from $200,000 a year ago. That's about a 7.5% increase. New listings rose by 8%, which is good news for buyers because they have more options available to them. Closed sales, however, were down 5.5%. Homes are sitting on the market longer. The average days on the market is now 62, and it was 54 last year at this time. Inventory has also increased to 3.75 months, which is up 19%. All of this tells us that the local market is shifting towards a balance. Sellers can still expect good demand, but buyers now have a little more breathing room and negotiating room. So if you look again, we're looking at July 2024 versus July 2025. If you're thinking about buying or selling, or you just want to talk about the process or what's happening in your local community, I'm only a call or a text away. My contact information and links to my free buyer guide and seller guide are in the description. Be sure to subscribe and tap the bell so you always know when a new video is posted. Thank you so much for watching, and I'll see you on the next update.